Hey everyone, welcome back, and thank you all so much for taking the time to join me with our daily GameStop review. It was a red one today, minus 3%. It's not that bad. The general market had a bit of a retracement. What's this? S&P 500 down 0.3%. Not as bad, but we've seen so many, and I cannot even explain. Well, I can explain a little bit within today's video. Just a billion, well, not a billion, about 400,000, which is close. $5 puts. That is a lot, right? That is a big old number. And of course, the market makers are going to hedge that as well. So, talking a little bit of the mechanics of that and why we think it's happening in today's video, as well as breaking down our price structure on different time frames for my own technical indicators, as well as Roaring Kitties, and then some news. Of course, it's the 7th, so warrant delivery today. I think everybody was getting their warrants near the end of the day. Fidelity, E-Trade, a little bit slower, but that's fine. I honestly think slower is better, right? But of course, we're going to have to wait and see how tomorrow unfolds and the next couple days, because as far as I can tell, they're not trading yet, at least not on my broker. They're expected to trade within the next couple days. Of course, that doesn't mean you need to trade them. Well, at least sell them. You can buy them. That would be fine. Specifically, considering where we are, within our price movement. So basically, at our bottom trend again, there's the risk reward is very nice. Doesn't mean you have to go all in. You can start to average in with anything that you may have scaled out at the fill of the gap at 28, right? Not massive gains, but consistent gains if you're taking them. Of course, I know the gap fill at 28 was a little weird because we were dealing with the ex-dividend date. Everybody kind of wanted to hold on to their shares, and it is what it is, right? So moving forward, you'll no longer be able to auto-exercise for GameStop, Bed Bath & Beyond, I think, and Wolf, which is interesting. That is interesting. A new filing by the OCC here today. So, yeah, making it a little bit more difficult for people to exercise, which means it might be an important thing to do moving forward, right? Specifically with those warrants tied to the options chain, right? We see that within GameStop. We see that within Bed Bath & Beyond. And Wolf, that's its own monster. We'll talk about that another time, maybe. But it's similar thing where it's a short squeeze, right? And there may be some individuals at risk that the OCC is maybe looking out for as best they can. So, technical analysis on the day. We already said we're down 3%. Starting on our 15-minute chart up top here, we had a bearish order block form off our market structure shift to the downside, blowing out our morning low, right? So kind of tried to pop up, rejecting that 4-hour order block, which was support. Now it's resistance. Oh no, it's only fun when these things work out in our favor, right? So, we could probably go get rid of that. Well, let's leave it here for the day. And, that sends us down for the afternoon, and then we make a new low and try to retrace higher, but eventually blow out again. And there's a second bearish order block in one day on the 15, which is pretty brutal. It's not good. It's, awful is what it is. Moving to our 1-hour chart here on the bottom now. We have that order block from the blowout of yesterday's low this afternoon, which is unfortunate. Just institutions selling, right? And when we look at our options chain, we see a lot of these $5 puts being loaded up. And, we can never really tell what another participant in the trade is going to do. That's their decisions, just like it's your decision to do things that you're doing, right? And no one else is making that for you. So the bondholders get the warrants, which increases their long exposure, and they would need to hedge that now with short exposure to $5 puts, right? At which point the market maker shorts GameStop and we see this price movement. Not great. They could have just unloaded their warrants and they're not trading yet. So that, just didn't happen, I guess. Furthermore, the bonds were oversubscribed, right? So in high demand. So it may not make sense for them to want to sell their warrants as they are trying to get as much exposure to GameStop as possible for, the next decade, I would assume. So probably just, increasing that hedge, right, to become delta neutral again. At some point, they will have to unwind it. It's a lot of shorts, like an ungodly amount, 416,000. And those are bundled in 100s. So just an ungodly amount of short pressure on our stock, which has, allowed the market maker just to bleed it down. And we're at the lower band of our gap on the 1 day and almost falling through it, bouncing into our earnings gap. That's insane. The news from earnings was so good that we should not be this low. Now, with that being said, the market is forward-looking and it understands that GameStop will be diluting itself, and it prices that in ahead of time, right? Just because it hasn't diluted yet, because there hasn't been any of the shares exercised, doesn't mean that it won't happen. And it is a likely event, and we are forward-looking, so here you go. However, now all that's baked in, right? Now we can just move on with our day, and we don't belong down here. Honestly, what good entries. So if you wanted to start scaling in, I think that this is an excellent time to start averaging in. Doesn't mean, you go all in, but it's beautiful. Now, the option contracts are a little different. I would prefer to wait for a reversal signal for confirmation, just so we're not buying into, a consolidation phase where we just bleed data, right? There's no need for that. However, the shares could trickle in at this point. So the 1 hour chart had that order block. We don't like that. We rejected the 4 hour and broke down. And even slicing through our sell side this afternoon, which is unfortunate. So, yeah, not great. Bouncing off the earnings gap is kind of crazy. And then we can maybe move out more to the 4 hour here, at which point, we have that reversal signal the other day. And now we have a key level breakdown. So this is, not good. Again, it's been the theme. If we lose the gap here, then it's, there's nothing. There's not much. I mean, a lot of room to the downside, and then we're back to trend line, which is where they'd love to have us. And honestly, I don't think it would be uncommon to come back here. However, earnings was crazy. We had really, really good earnings. So the fact that we would go back to where we were is suspect and just screams to me risk-reward ratio, right? Which is very, very good. Like, so for example, if I'm entering the trade here, here's my stop loss below the sell side, below the trend, I can get 1,000 shares, 1,300 shares, right? Based on a 3% risk reward on my account, which, technical traders follow, LOL. We don't all YOLO in. But if we drop to the trend line, now I can get 4,000 shares, right? With that same 3% risk. I've not changed my risk, right? But the reward is now potentially much higher if it does decide to go. So the lower we get, closer to the trend, the better the risk reward, and the tastier it looks for traders to enter and go long on. And that's going to help us swing that momentum back in our favor, and maybe we can make another run and break this high. We'll have to wait and see. It's going to be a long story as this unfolds. With that being said, it can change in an instant. All it takes is a tweet, right? Some other catalyst to pop up that was unforeseen, at which point all of this is blown out of the water, and we do a new thing as well. So This is really bad. That reversal signal with the key level breakdown, gross. This is where we could go to. There is a sell side here on the 4-hour that kind of coincides with the bottom trend. I didn't think we'd ever do it, but maybe we do. And then we can quickly look at the 1 day here as well, as now we've re-entered our bullish breaker block, which isn't great. We have a market structure shift here too on the breaker block blowout on the 4-hour. Losing the 200 exponential moving average on the 1 day is disgusting. Can we reclaim it before the EMAs reverse, before the 21 crosses under the 50, and before they both cross under the 200? Aye. We would not like to see that. However, of course, there is this bullish order block down near that trend, near that sell side liquidity on the 4-hour, which we could target as our very last support zone. Now, I know we've got these other there's just no way, though. I truly don't see these bottom sell sides being tested, but there's crazier things that have happened. Maybe we get some global economic crisis or catalyst that drives everything down. The entire market would need to basically be crumbling for us to maybe see this zone, I think. Much more unlikely than just our bottom trend line, which I still find to be unlikely considering how good earnings was. And I would be willing to call the bluff at any point here and start averaging in to say, you know what, nice try, everyone. That's very funny. Because we can just attribute this downward pressure to the re-hedging of the bonds, right? Which we can see the massive amount of puts here, which will be shed from the market at some point, right? And then we can, do another one of these, and it gives us something to watch, to keep our eye on for future runs. Does that hedge evaporate, and is that going to be maybe a potential signal for us as traders moving forward into the future? So with that being said, we can move into Kitty's indicators here as well. And, we did lose our RSI. However, maybe we have this as our trend line, right? 1, 2, and this could potentially be 3 for a bounce here. And that will be a new trend line established for us on our RSI. And then we could challenge the downtrend, right? I'm going to go ahead and delete this finally and maybe try to work with these moving forward. We did lose, of course, the 100 simple moving average, and now we're challenging the 50, which, we've got the lower band of the 1 day gap. We have the earnings gap up. We have, our lower moving averages here. So there's a lot of potential support in this area. No doubt. Potentially, we could fill the gap just as we filled this one, right? Just kind of enter into it and then, expand in the opposite direction. It is what it is, right? The MACD remains negative and continues to diverge, which is unfortunate. And the PMO has crossed the signal line, which is also pretty gross. We'd have to now basically be looking at the 4-hour for a bullish reversal, and then can that 4-hour bullish hold, at which point now we can kind of zoom back to the 1 day to see if it can reverse like we did here, right? If we don't, then things are looking pretty grim for a potential extended period of time as, the warrants pre-delivery date hedge has been shed. Once people get the warrants, they can drop, the shares because they don't necessarily need those. We also have the people who are looking to get the warrants, adjust their hedge through these $5 puts, as far as I can see, and then the market maker acts accordingly, bringing us down. So not looking great. Of course, this is subject to change. It was Bed Bath & Beyond, GameStop, and Wolf. Very telling as far as I'm concerned. The options chain doesn't look good at all. But again, this can change. And we need to wait to see how it's adjusted. And I think it's being adjusted right now, honestly. So we'll see how tomorrow ends. Let's see how the week ends. And then we could probably have a little bit of a better idea of what everything is going to take place of. The RSI below 50 here as well. That's signaling continued bearish momentum potentially. Sellers are in control. Obviously, look at those puts. But again, this is subject to change. They're not going to be loading 200,000 $5 puts every day. Like that will stop. And eventually, I believe it will be hedged in the opposite direction. So not all things last forever, both on the upward as well as the downward, right? So it's good to remember. And potentially, I know a lot of people just like to diamond hand their shares. That's fine. But if I could make any recommendation, and I know this last one was weird, I honestly didn't do it myself. Scale around your core position. Sell 5%, 10% of your position on the pops, on these RSI breakups when we're above 70, and then you can buy back that 10%, that 5% on the trend dips, and then get used to doing that, and you can grow your position without risking too much of it. And you'd be surprised how quickly it can compound. All that and more in tomorrow's video. Thank you so much for watching. If you have any comments, suggestions, hit me up down below. Of course, subscribe to the channel for future videos, and maybe leave a like as well if you're having a good time. I know it was a bit of a sad day, but we'll come around. We'll come around. So cheers. Take care of yourselves, and we'll see you soon.